Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This simply talks with another video, and this is a very important video with respect to the market. So, today we are not going to talk about where the Nifty is headed, not only about that, but actually where the fall could take place, or let's just estimate as to if there is a major fall that is just around the corner or not, or where are we headed by say year end or by January, February, and so on and so forth. How are the valuations, etc., because the way the markets have behaved and the way the markets have gone up, it seems like that this is going to be a bull run that will just continue forever, which will not happen. So we are going to discuss actually more or less about the fall, the extent of the fall, and when or where this fall could be triggered, by which factor that fall could be triggered. We'll discuss all about that. So let's get started. Plus, I'll have a small cap stock for you. There have been a lot of requests coming in for me to bring in those small cap stocks that could perform exceedingly well going forward, like I used to do 3 4 years back. The only reason I did not do that is because of the kind of valuations that mid and small caps are trading at, but there are companies that could be looked at even now. So we'll discuss about all of that. The video could be in two parts because I'm expecting somebody, so there could be some hindrances, and so I may record the next part in a while, so that could be a factor, or the video could complete in this part. So we'll see how things go about. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should that with their own due diligence and research, and I'm not in favor or against any company that I talk about. I'm not a member of the NSE and BSE, and that I'm not an official portfolio advisor. And whatever I discuss here is purely on my education, purely on my experience over the last 12 13 years being in this market. And hopefully that would go a long way in making you understand how the market texture is, how does it behave on a shorter term basis, and how things go about. Before I talk about the company as well as the markets, here's small request that kindly support me on Patreon. Once you do that, help me grow the channel, help you also ask me questions, seek out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put out from time to time. Also, I have discussions on domestic and global economy, answers to all your queries, and whatever changes I make to my portfolio, whatever you can say strategies I have, I do discuss there itself. So now let's get going on this factor and this question as to how come this market is just not relenting and just going up. So I need to give you an idea. So I want to just give you an idea as to how the market is placed at the moment. It made a new high just recently. So where is it placed on the basis of valuation? So currently we are at 24,835. We are seeing on screener, and the P of the market is around 23 and a half times. Now this may seem stretched, and this may seem that the market is overvalued, etc. If you are a value investor, yes, it is extremely overvalued. Markets should be trading at 17 to 19 times. It is trading at 23, 24 times. I have talked about it a number of times about it. If you look at a 10-year average of the market, it comes out to be around 23 and a half times. This is very interesting, but you need to understand that during the pandemic, market shot up a lot, and the earnings were not there because of the pandemic. Earnings were not there, so this is an anomaly. So if we take this period out between Jan 2020 to October 21, in which the market really shot up unbelievably, if you take this out, then this average of 23 and a half comes down to 18 19 times. So normally market trade at 18 19 times. That has been the historical average value for the last 30 40 50 years, that On an average, if you say that market is fairly valued, it will be around 19 times, 18 times, not even 19 times, around 18 and a half times or so. But we have seen, if we see over the last 3 years, hardly market going to 18 times. If you see here, it was 20 times in March 23, where there was a lot of chaos, and everybody was saying that everybody was like writing obituary about the market, and the market shot up. Even in, you can say, June of 2022, if you remember, there were a lot of political issues and other things. Market went down to 19 times, just under 19 times or so. So this was the fair value region for the market from a 3-4 year point of view. And look at how the markets have behaved from there on in. So why is the market trading at one or two standard deviation higher I'm sorry, at the moment, compared to what it used to do in the last 20-30 years? There have been a lot of factors, and you might write some of them in the comment box, but one of them has been the retail participation that has gone up appreciably from 2018 2019 till now. And there have been a lot of money pouring in, 30,000, 35,000 crore on an average, coming into the market. So if you look at FII DII selling in the markets, it's usually around 15-20,000 crore if it is on the upper side. Sometimes it goes to 30,000 crores, and we are seeing mutual fund flows coming in of 30,000 crores, and that is the major factor why this market is not falling now. When will this tide turn? I don't know, but this will turn, and this will turn in the near future. That I do know, because of the way the market is behaving. So I'll now come to that. So currently the market is trading at 23 and a half time. It's not in the danger zone normally. So if we go back further, if we go back 10 years down the line, then we had a situation in December 17, if you remember, when the market peaked out big time, and 2017 was a big year. The market was trading at 27-28 times. Around that 28 times it traded at, and then finally we had a fall, and the market went back to around 25 times. So I think the stretched value would be around 25-26 times on the current earnings. So what is the current earnings? It's very easy to calculate. 24,835 upon 23.4. The current earnings is around 1,060 rupees. At around 1,060 rupees, if we say market stretches to around 25 and a half times, we are looking at 27,000. So I will not be surprised if we go past 27,000 by year end, the way the market is behaving. That is not to say that the market can reverse from here. It can. So let's take two scenarios. Let's take a scenario where the market starts reversing from here straight away. In that case, I believe that the bottom of the market is around 23,300. So even if the market reverses from around 25,000, we will see a decline of around 1,500 points from here. So that is a dip of around 6-7%, not more than that. Why I'm saying that is because around 23,300, based on 1,200 rupees of earnings that we are expecting for FY25, we'll be trading at around 19 and a half times, which is less than normally where the market has fallen to. So even here you see it fell to around 20 times. So 19 and a half times is where we'll be headed. And I don't think that the market could dip more than that. So a 6% decline is expected in the market from these valuations. On FY25 basis, we'll be trading at less than 20 times, and again there will be a rally. So where will I say, or where will we, or we can say that the market is overpriced or extremely in the greed zone, extreme greed zone, etc.? That will be around, you can say here. So if you see here in January of 2022, after the fall in October, if you remember, we had a you can say a rally, a quick rally, and the earnings did not come through. So around 25 and a half times, I'll be very worried. I'll be worried, and I might just stay in cash at these valuations. And if you take even at current earnings 1060 25 and a half times, we are looking at 27,500 or so. And if you say if you take 1200 rupees as your you can say FY25 earnings, and you take a factor of 27,500 on the Nifty, then we are looking at 23 times on 1 year forward, which is stretched, which is in no mean you can say fair valuations, which should be called as stretched valuation. So I think between 27,000 to 27,500 is the first level of stretched market, you can say, number we could look at. An extreme would be in which you could say that all hell will break loose and everything is going up, and everybody wants to buy shares and like that, and what was happening in 2008, then you have to go to 28 times. But that was the valuation in 2008. I'll just have a look. I think in 2008, yes, we were at 28 times. That was what I was talking about. So I think 28 times is the maximum level this market could stretch to, and you will be surprised as to what that number would be on current levels, on current number. So 10,060 into 28 is around 30,000, 29,700. Let's say 30,000. I don't think we can go there in just one go. We might go there. I'm not saying we will not go there. We can go there this year itself. I'm not taking that out. We'll see how the markets behave, but it will be very very difficult. I think that's a 10% chance for me seeing the market going to 30,000. The base case scenario in my opinion is that the market could go stretch to around 24 times, then there could be a decline around 25 and a half thousand, but eventually we could be headed towards what we call around 28,000. We could be headed towards 28,000 by the year end. Why I'm saying that? What did I calculate? I calculated the FY25 earnings and multiplied with the current valuations of 23.3, 23.4. So around 28,000 we can expect by January. Now why I'm saying January time and again, I'll come to that now. So 28,000 is my target by January. That is not to say that the market cannot decline from here. I think on the lower end we could see 23,000, on the upper end we could see 28,000. Now you can analyze yourself as to which stocks you're holding or what you need to do with the Nifty for the year, etc. But that's what I'm seeing: 15 to 1800 point on the lower side, to and on the upper end 3000 to 3500 points on the upper side. That is my assessment. I believe 1:2 ratio could be maintained even from here, because the valuations are not extremely stretched. It is stretched, but it's not extremely stretched. I have told you, and if I made you see this, you can say the chart from say 2006 onwards, from 2006 till now, this has been, you can say, stretched valuations but not extremely stretched valuations. Now why I'm saying January? So there are two factors to it. What is the current you can say short-term capital gains tax? Current short-term capital gain tax is around 20%, which has been increased just recently, and nobody is happy about it who are investing or trading into the market. And the current long-term capital gain tax is an odd 12.5%. Why odd? Because this is not a whole number, this is not a rounded figure. I believe that we are headed towards a situation where the long-term capital gain tax in February could be increased to 15%, and the short-term capital gain tax could be increased to 25%. Eventually, we are headed over the next 5 to 6 years in a scenario where everything will be taxed at 30%. Maybe long-term capital gain tax will stay at 20%, but eventually short-term capital gain may increase to, the taxes may increase to 30%. So we could be headed towards 25% on the short-term capital gain tax. and we could be headed towards 15%. Now why I'm saying that is because if you see the difference between short and long term, earlier it was 10 and 15%, so the difference was 5%, and that's around 50%. So the short term capital gain, sorry, the long term capital gain was 50% or 33% less than the short term capital gain. So short term capital gain at 15%, long term at 10%, difference was 5. So how much greater was the short term capital gain? It was around 33%. If you see 12 and a half and 20, then we are at a scenario where it is around 37-38%. So this is going to increase. The trajectory is increasing. That is what I'm trying to tell you. This is the trajectory will keep on increasing, and when we say 25 and 15, then people over a period of time, not at that point of time, but 2-3 years down the line, will say, okay, long term is 15%, short term is 25%. Let me do long term investment. I am you can say saving around 40% compared to short term capital gain, and there is lesser risk. So this is where we are headed: 25% on the short term capital gain, 15% on the long term capital gain, and that could be announced in February. So there is more bad news that, in my opinion, is going to come. The market at the moment is ignoring that, and the reason market is ignoring that is not because the market participants are fool, not because the FIIs are fool. They are selling. It is happening because of higher liquidity. So this liquidity flow will take the market higher till January or so, before the budget, and we could be in a situation that we could be around 28,000 by that point of time. And if we look at it from at 1200 rupees, will be around 23 and a half times, and people will say, okay, market normally trades here, we could be headed toward 30,000, 31,000. But then I'll be extremely cautious because of the budget, because of many other factors, that the year would be ending and there could be tax harvesting even more taking place at that point of time, etc. And the market will slowly grind lower either in the second half of January or especially after budget. So I have a feeling that by March end, or March 20th, March 25th, over that 10-11 week period, we could decline, and decline big time. So how much can we decline from there? So 28, let's say 28,500 we make a top. We should be down between 15 to 17%. So a good 4,800 to 5,000 points we could be lower. And if I say from 28,500, again I'm saying that we have, again, what value we get to around 23,500 with FY25 done. So on current earnings of 1,200 rupees, will be back to 19 and a half times. That is why my thesis is here, that the market will fall from early January next year, because of the factor that the market would have priced in to the hilt the valuations, and the fact that the taxes might be even going higher, and there could be other triggers in the budget. We'll go back from 23-24 times regime, or the current scenario, to around 19 and a half times, albeit for a day or two, albeit I don't know, for a week, I don't know, for 1 month, but we'll be around at least 19 and a half times. Will be even lower, I don't know. So when that happens, because I as a trader do not trade in Nifty stocks, very rarely I buy Nifty stocks. Why I am telling all this is because the market will fall 16, 17, 18%, but the mid-cap index may fall 25, 27%. So let's come to the mid-cap index. So if we come to the mid-cap index, and let's see where the CNX mid-cap index is, then we'll have a clear idea as to how much fall inherently the market might be having. 58,000 is where the index is. Again, it's getting to new highs. The RSI is around 63. I think this RSI will stretch to around 75, 80. I think this is headed northwards towards these levels of 76, 77, 79 even, which was January of 24. I think the market will stretch towards here by Jan, and then the decline will happen. So I have a feeling that if I'm saying 28,500 from 24,800, that's a 15, 14, let's say 14% increase in the market. In my opinion, since the market, the Nifty is going to go up 14%, I think the mid cap index should be up 1.3 times, around 18%, 19%, let's say 20% from here. Let's say 18% from here. So 58,000, let's round it off. Let's just see what 18% is. So that's around 68,000. We are looking at a scenario. And remember, these are all conjecture, these are all estimates we have to build in order to have an idea as to how we are going to trade over the next 6-8 months, how we are going to invest into the market. So mid cap index could be headed towards 68,000 or so. From there on in, I think the market is going to fall, the mid cap index, and we are going to fall big time. I think we are headed towards these valuations. The highs of February 24 or so will be reached, which was around 49,000, 48, 49,000. So from around 69,000 to 49,000, a dip of 20,000 points is what I expect. That's around 29%. So that aligns with what I say is going to happen with the Nifty. Nifty down 17-18%, and the mid cap index down somewhere around 28%, which is 1.5 times. The fall is even greater than, remember always that the fall is always greater than whatever the way the market has gone up. So I think at least we will head below 50,000 by that point of time. And currently the markets, you can say 50 DMA is around 55,000. So those who will sell at 55,000 will still be better off, and they'll say that okay, the market has, the others who will not sell will say the market has already fallen so much from 68,000 to say 55, 56,000, whatever the 50 DMA will be at that point of time. Say let's say 60,000. They'll not sell at 60,000, they'll see 49, 48,000 on the mid cap index. So that is the kind of, you can say, carnage we are going to see in the mid cap index, and then real value will come out. Why I'm saying that is that if we look at the valuations of the mid cap index, we'll have an idea. So I'll give you an idea of the valuations of the mid cap index. So if I look at Nifty mid cap on the screen, let me just open that midcap 100 index. So it's at around 57,000. Look at the P, it's around 43. Now 43 again may seem a lot for you, but if you look at 5-year average, then it's around 25. Okay, so that's why people are saying that it is extremely stretched. Now what will happen is, currently the market PE is around 42.5 times at 58,000. Let's say, let me just see how has been the earnings. So the earnings is around 1365. Now when I'm saying that the market will come down to say 49,000 on 1365, will be again back to 35, 36 times on current earnings. So this earning will increase by March, I'm pretty sure, and this increase in earning will be around you can say 20%. So around 20% or so the increase, and since half a year is left, so let's say 10% from here, so around 1500 rupees. So the EPS for the midcap index will be around 1500 rupees, and the index, if I say, is coming to 48,000 at 1500, we are seeing 32 times. So from around 42, 43 times will be back to 32 times, which on a 5-year basis will not look extremely stretched. Okay, 28 times is the 10-year average. On the maximum basis, again we are seeing 21 times, but on a 10-year basis we are seeing 28 times. We'll come back to 32 times on that average, and then we move higher. And that is why I'm saying that the midcap index could fall 30% from the top, and the top is still to be made. I think there could be a big move in the mid cap index that is coming up, because the last hurrah is always the best. So I think this will be a big rally, maybe from September onwards, maybe from November onwards, the 2 3 months before the fall. 2 months before the fall, if you remember, in 2021 October, what happened with IRCTC and the likes. Similar thing will happen with stocks here. I don't know which sector, but with stocks over that period. So we'll see that. So I think the index will first go to the mid cap index will first go to 65 68,000, and then we'll have a fall. So that's my assessment. I believe the next 4 5 months will see a rally, next 6 months with small declines. I'm not saying that we are going up straight away and everything. We will see small declines, but eventually the fall will be big and the fall will take place. In my opinion, the fall would be taking place between January and March. I think that is the period, because that is where the election trigger of the US would be done with, and will have 2 3 rate hikes as well by that point of time. So again, the markets will price that in, so everything will be priced in, and the markets will start to fall. So even on the global market front, I believe the next year, the first quarter of the next year will not be that great, and so the market will fall in tandem. Now for the stock that I wanted to talk to you about, and okay, one more factor I want to say is that which index may perform over this 6 months period. I think it will be CNX IT. The way IT is behaving, IT should perform well. Mid cap IT, small cap IT, large cap IT, they will perform, because even a little bit of trigger, even if the numbers are not there, then the valuations will go sky high. The valuations will go through the roof, and then the fall will take place in IT, most in IT over that 2 3 month period. So I think IT will have a very good period over the next 6 months, and IT will be the index that will be falling the most. After that, if you look at, this is the all-time chart of the Nifty IT, and if you look at it, 39,400, 39,800 was the previous high. That was in 22 January, and this is now looking like we are headed much higher from here, and we should go 20%, 15-20% higher from these levels. So this was about the index, as to which index will go higher. Now let me just talk about the stock that was in question, and I wanted to talk to you about this. So I want to talk to you about Phenotech's chemicals. So first of all, I'm now bullish on the chemical sector. The way the charts are behaving and the way the numbers are coming up, we have seen how Sumitomo Chemicals have come out with very decent numbers. I believe mid cap, small cap chemical stocks may start performing extremely well. So I bring to you Phenotech's Chemicals, a small cap stock, 4,000 crore market cap company at a PE of 34. So what does it do? So basically it is in the business of manufacturing auxiliaries and specialty chemicals for textile, construction, water, etc. Majorly they are into textile, and I believe that with the textile PLI and many other things that the government is doing for textile, I think textile sector as a whole should perform. So this is you can say a auxiliary play to the textile sector, indirect play to the textile sector, and this could perform extremely well going forward. So basically what do they produce? If you look at it, textile chemical segment, so specialty chemicals, a producer with a focus on textile chemicals. Biotech's Malaysia spearheads the R&D division there. Cleaning and hygiene products they produce. Their key customers are Nahar Group of Company, again a textile company, Welspun, Raymond's, Shahi Only, Vimal, Vardhaman, etc., Chenab, and JCT, and so on and so forth. They have a lot of business around, you can say, across the globe. They have business in around 70 countries, but most of their revenue comes from domestic market, 77%, export is around 23%. So I believe that this should perform going forward over the next 2 3 years. So from a medium term basis, 2 to 3 year basis, this could be invested upon, and if the numbers continue to be good, this could be big, because if you look at it on the PE basis, it's not stretched. 32 33 times is its 5-year average. Currently it's trading at 34 times. uh, Even on a 10-year basis, the average is around 22 times. Yes, it's slightly stretched, but if you look at it, it's best of the valuations have been around 60 times. Even in March of 2015, February, March, it was trading at 52 times. So when there is a textile rally, or there is a lot of, you can say, bull run in the textile sector, the valuations could stretch to 50 to 60. At a PE of 50 to 60, the stock could trade at. The reason for that is the ROE is around 30%, ROCE is around 39%, and the company has been producing decent numbers in difficult, you can say, market situation, industry situation. So in the March quarter, they did a growth of around 11-12% on the sales front. On the profit front also, they did reasonably well, 20% growth on the profit front. Margins were maintained, 24% last year and 25% this time around. The June quarter numbers have not come out. So this is something to be looked at, could be in your portfolio from a 2-3 percentage point of view. You can analyze it. There's no recommendation, but you can analyze the company as such, as to how, whether to get into it or not. 64-65% promoter holding. There is a reasonable FIDI holding, considering it's a small cap company. So overall, a decent company to look at as a small cap from a long term point of view, Finotex Chemicals. So this is my video on the company as well as on the market as a whole. Please like and subscribe my channel, hit the bell icon so you get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.